Hey, how's it going? My name is Nate, and today I'm going to be showing off my screener that I use to find swing trades. I'm going to show you what I'm looking for, how I quickly go through a bunch of different stocks to quickly find what it is that I'm looking for, and also show you the different features that the screener that I have and kind of how I use it. Not saying that my way is the right way, and there's so many different ways to trade. But I want to just kind of walk through some of the things that I've found, some of the strategies that I'm using right now, and yeah, just dive right into that. Before I get started and actually showing you the screener, what I want to do is I want to kind of talk about the methodology of what I'm using and how I look at things. Again, not saying that my way is the right way because there's so many different ways to trade, but this is just one of the things that I'm focusing on, one of the techniques that I'm using. And so maybe some of you guys will find it helpful, or you'll be able to extrapolate different ideas from it and kind of modify it to your own. Now, one thing I would like to start with is pointing out that um, a lot of the strategy that I have built here is based off of Mark Minervini. He's one of the best traders of our time, to be honest with you. Along with there's a bunch of other traders out there that are incredible, but Mark Minervini really kind of is a pioneer for this system, and it's based off of his his research and the stuff that he's done, the books that he's published. I've actually just finished a couple of them. And so some of these ideas, or a lot of these ideas, if you read his books, you're going to find a lot of the same information. And so this is kind of what I've modeled it after. Now I've of course like taken adapted and changed it a little bit. And he's more Mark Minervini is more of a long-term investor. Maybe not long-term, but he looks a little further out than what I do. I'm going to be more of a swing trader, or the techniques that I'm using lately are going to be more swing trading, but the concepts are still going to be kind of the same. I'm going to be looking as mostly a breakout trader as opposed to like buying pullbacks and stuff like that. I'm going to be looking to capitalize on breakout moves when price is getting above a certain point and I'm catching that breakout. That's the style that I like. It's what's easy for me to find. Of course, I sometimes will buy pullbacks if I think that it's going to be, this is a good pullback area. It depends. But to keep things simple today, I'm just going to be focusing on really just like breakout strategies. So um, the first thing, well, to kind of go over it, the system that I have is obviously finding a trend. We need to follow a trend. If you're the trend is your friend, right? So if you're not following some type of trend, it makes your life a whole lot more difficult. So I like to establish a trend, and I'll walk you through what that is. The next thing is fundamentals. Now, the reason why, for a long time, I didn't pay attention to fundamentals. Like I just thought, that's just not something I need to care about. I was mostly, a TA type of guy, and so fundamentals weren't that important. But as I've done more research and digging, I realized that fundamentals are, well, fundamentally what drive price, right? It's the things that big money is looking at. So maybe not on the on the daily scale, fundamentals probably don't matter. If you're just doing intraday trading, uh, TA is probably your go-to. But if you're looking to swing trade, I think that it's really important that you look at fundamentals, because that's going to largely dictate. I mean, swing trades can be anywhere from like what, a day to 30 days, or even 60 days, 70 days, whatever it may be. It depends on your time frame, but fundamentals are definitely going to play a big part of that. And I believe that fundamentals play a big part of what big money is doing. So being able to understand and look through the scope of what big money is paying attention to can really change how you view stocks, and being able to find what is going to be the next big stock that big money is going to put their money into, right? So we'll get into that. Catalyst. So every stock needs a catalyst to really, propel price. And so I'll dive into what that can mean in a little bit. Of course, the entry and the exit are also important, and I'll kind of just go over those. Most of my time today is going to be focused on talking about the trend, the fundamentals, and how I set up my actual screener itself. So first thing to talk about here is stage analysis. So largely what I am focusing on and the trend template that I actually use, or basically the filters that I have for my screener, is based off of a stage analysis. So if you are not familiar with stage analysis, really it's about following, well, the uptrends and downtrends. Every stock goes through a series of uptrend and downtrend, right? So here we're looking at Nike, and you're going to find this with, just about every stock out there, right? I mean, it's just clear up and then down, clear up and down, right? And as you go through a stock's history, you're going to find a repeatable up and down system. My goodness, where is Nike here? Get back to Nike. There we go. So the stage analysis is going through a stage one where the stock is basically moving sideways, and your MA. The easiest way to find a stage analysis is to use some type of MA, whether it be the 200 MA or 150 MA or whatever it is. I use the 200 MA, and that's what most, I would say, stage analysis is usually built upon, is the 200 MA. But for me, looking at this here, we're kind of up a plateau. The MA is moving sideways, stock is moving a bit sideways, and then it starts to move up. And this is what is your stage two. And that's when the stock is, just going through a nice growth stage. Stage three is when it starts to kind of flatten out. And then stage four is when it starts to come back down. Now, I'm not going to go too much deeper into stage analysis. If you want to look at what stage analysis is and how to interpret it, you can do that. But that's largely what I'm looking for. So when I look at stocks, I'm looking for stocks that are starting to swing up, or they're already, have a nice developed trend. Okay. So real quick, I'm going to go over the colors that I have for my MAs. These are this red one is going to be the 200 MA, the yellow is going to be the 150 MA, and the green is going to be the 50 MA. All right. So I'm just going to assume that most of you guys know what MAs are, how to use them, so I won't go deep into that. Getting back to strategy here. The template that I'm going to use, or the trend template that I'm going to set my screener for and how I'm looking at stocks, is going to be based off of this here. So the first thing I'm looking for is that the price is above the 150 MA and the 200 MA, right? The next thing is that the 150 MA is above the 200 MA. And the next thing is going to be that the 200 MA has been trending up for at least 1 month. And the next thing is going to be that the 50 MA is above the 150 MA and the 200 MA. I would like that the price is above the 50 MA, but I have asterisks here just because I have a little bit of leniency to that. And that's something that Mark Minervini points out in his books, is that he'll buy, I think he says something like when price is no more than 8% below the 50 MA, this is his rule. So I kind of follow that. Somewhere in between 8 to 5% is what I'm looking at. I'll have a leniency, but if the price is below the 50 MA, I'm not as excited about that stock as opposed to if the price is above the 50 MA. Okay, so this one's a little bit loose. The other ones here are pretty much strict rules that I try to follow when I'm looking for what I put into my screener and what I'm looking for when I'm looking at charts. So the next thing is going to be that the current price is at least 30% above the 52-week low, and the current price is within at least 25% of the 52-week high. I'll explain that here in a second. Relative strength ranking, that's not RSI. This relative strength ranking comes from a website called investors.com, and they have a proprietary algorithm that they've developed to compare relative strength. And this relative strength is based off of all the stocks in the stock market, or at least the ones that they have in their database, that they compare side by side, one against the other, to be able to build a relative strength. So stacking, let's say, Nike as an example versus all the other stocks in the stock market. How does Nike look compared to, Nvidia? How does it look compared to Roblox? Stacking those up one by one can give you an idea of how strong one stock is compared to the other. And that's what this relative strength ranking is going to do. Now, what I'm looking for, and this all makes sense when you see the screener, what I'm looking for is something at least 70 and above. and prefer somewhere in between 80 to 90 or even higher, the better, right? I want to see that the relative strength that this stock is performing better than all the other stocks. Or another way to think of this is if you have a stock that's 70 and 100 is your max, that means that the stock that you're looking at, if it has a 70 relative strength ranking, that means it's 30% better than all of the other stocks out there, right? It's in the top 30%. This would be the top 20%. This would be in the top 10%. Okay. So let's go back to the actual charts here, and I'm just going to walk you through some stuff. So if we're looking at this, one of the first things that I'm looking for is that the price is above the 150 and the 200. So we can clearly see here's the 200 and the 150. Price is clearly above it. Next thing is that the 150 MA is above the 200. Here it is. We can see that the red line is above the yellow line. I want to point out real quick here that I'm not like a crossover guy. Like when this crosses over this, what I'm doing is I'm looking for what is the trend. I'm using these to show me the trend. I'm not looking at these exact things of like, oh, this is just crossed over from here, you know, the 200 just crossed over the 50 or whatever. I mean, although you can use that for sure, but that's not really what my strategy is built around. What I'm using this for is to show this is how I'm qualifying or filtering my trend template, what I'm using for my screener. So that way I can get rid of all the other junk that I don't want to see, like Roblox. Right now, I'm not really that excited about Roblox just because of where it's at on the chart. I'm more excited about something like Nike. Nike looks better, right? So that's how my screener is built. So next here we got the 200 MA up, trending up for at least 1 month. And so if I'm looking at this, I would say, I don't know, somewhere about here, probably it starts to trend. This is really a trend up here. So I'd say about right here, but it's all subjective, right? But where did it stop going down? I would say roughly probably about right here. So we're looking at the end of February, and we just passed the 1st of May. So it's been going up for probably a month or two now. So next up here, let's see, we have that the 50 MA is above the 150 and the 200. Here we can clearly see that's the case. The price is above the 50 MA. That's another plus here. The current price is at least 30% above the 52-week low. Now, to figure that out, and this is all done by my screener, so I'm not really particularly paying attention to this. But one way that you can look at that is if you're in TradingView, you can get an info line. I use this thing at least, well, quite a bit actually. What I can do is I can say, well, here my low is down here, and what would be 30%, right? So price is at least 30% above the 52-week low. If this is your 52-week low, right? If I put this here, my 52-week low is right here. 30% would put us, basically about right there. So price is definitely above that mark. And if I want to go to the next part, which is that current price is within at least 25% of 52-week high, right? I'm going to go from here and look at currently where the price is, which was say the close is right here. We're within, just under 4%, 3.5% from the 52-week high. Okay. And I'll go into that a little bit deeper later. But those are kind of the things that I'm looking for. And of course, the relative strength, like I said, that'll be shown on the actual screener once we get to that part. Next part I want to talk about is really the fundamentals. I want to dive deep into understanding what I'm looking at in the fundamentals, because I think that that's something that many times us retail traders, and especially like day traders, which is what I have largely been doing. I had just different life situations that are pulling me away from being able to do as much day trading, and now I'm having to do a little bit more swing trading. And so because of that, I have to apply a different way of trading, different way of thinking. And what I believe is that fundamentals actually do play a big part of it, and that it's something that we need to pay attention to, especially for swing trading. So the first thing I like to look at is high EPS growth that is at least 20% year over year. Now, the next thing I have listed here is to not focus on earnings beats. And if we come here on TradingView, and I think that so many times traders, myself included previously, I used to only focus on just, hey, are they beating earnings? Are they beating earnings? And if I go back, um, Nike, and so many other stocks out there too, they consistently pump out, these earning beats, but look at the price. Why is it going down, right? Now, some of this price, coming down is due to the market conditions that we were in a bear market. And there was, a lot of, it was just rough. It was a really rough time trading in here. And that happens. You're going to go through these cycles. The entire market will go through these cycles. But yet at the same time, they were constantly beating, right? So is there more to fundamentals than just the beating? And that's what I would argue is yes, there is. So I try not to focus on the actual beats as much. I mean, of course, I want to see the beats, but I want to look, are they actually increasing their earnings month over month or quarter over quarter, year over year? Is the revenue and the earnings, are those things growing together? And or is it going backwards? Because, if, for instance, if the earnings, even though they're beating, if the earnings is going, they have less earnings or they have less revenue, well, that's going to greatly change my perspective and maybe can tell me why the stock is going down. On the contrary, if they're increasing year over year their earnings by 25%, 30%, 100%, big money is probably going to be paying attention to that, and that's what they're going to be putting their money because it has a potential of acceleration. Okay. So the other thing that I would like to point out with don't focus on earning beats is a large part of the time analysts, well, let me say it this way. The company is going to under promise and over deliver, right? So they want to come out and give information to us. They want to give us guidance, or maybe leak some information that, oh man, the sales aren't going to be that good this month. That, oh, maybe our earnings aren't going to be that good this month. I meant this quarter. That earnings aren't going to be that good this quarter. It's going to be less. And then with the day that the earnings come out, and then boom, they beat their expectations because they had all the analysts believing that it was going to be less than what it was, right? And also you have to understand the psychology of the analyst. The analyst doesn't want to be wrong. The analyst doesn't want to say, oh yeah, Nike was going to be 80, and then they come out at like 25. Well, then that analyst now looks like an idiot. So the analysts, all the analysts out there, are going to try to come in just a little bit under, so that way when the actual earnings comes out, it's going to be better than what they expected. That's why so many times, even when the stock is going down, you're going to see that they still beat on earnings, but you need to dive deeper into what's actually happening with the earnings themselves. Okay. So next thing that I like to, I'm just going to point out is 90% of the biggest stock winners show some form of earnings acceleration before or during huge price moves, right? So I think that's really fascinating. This is actually the research that Mark Minervini has done, along with tons of other researchers and stuff like that. But most of the time, 90% of the time, you're going to have an acceleration in earnings when the stock makes huge price moves. And we're talking not just like 10% price moves, we're talking like hundreds of percents. When stocks like Google, for example, made their massive price, runs, go way back in time here, however long, when this started happening, if you go back and look at what was happening to their earnings, they were increasing these. They were increasing their revenue. It's a good part of the reason why people were starting, when big money said, hey, well, let's take this stock up. It's because they were doing things, that they were improving, that they were accelerating their fundamentals, that they were accelerating their rate of growth. So if you want to know where big money is going to start putting their money into and what stock is going to go next, you really should start paying attention to the fundamentals. Right. The next thing I want to say here and just point out is when I'm looking at stocks, I want to go into where the market leaders are. I used to think, like, oh man, look at this stock. Let's go to Roblox right now. I used to think, wow, look at this stock. It's at, the very bottom. It's at its 52-week low. Or here, let's go. This is one of my friends works for this company. And he pointed out that, hey, this stock might do decent on their earnings. And he was right. They actually did do decent on their earnings, even though they missed. But the thing is, he was pointing out to me is that they were at their 52-week low, right? So if you go to the 1 year, you look, they're pretty far down here, right? So the problem with that thinking, and I used to think this, like, oh man, the stock's cheap, I should buy it now. The thing that I think that's wrong with that psychology is there's a reason why that stock was low, right? I mean, it could be that it was a bear market, but if a stock is selling off, there's a reason why big money is not putting their money into that company. It's because something is wrong with that company, that maybe their future is not looking as bright, or they're not increasing their revenue, right? So because okay, here the next thing I got to say is, like, us retail traders, we don't move the markets, right? It's pretty egocentric to think that we do. Big money is what moves the markets, and so I want to find the stocks where big money are moving into. And if a stock is in its downtrend and it's hitting its 52-week lows, that's probably not a stock that I'm that interested in. Or at least I'm a lot less excited about that stock if it's hitting its 52-week lows. Instead, I want to be looking at stocks that are on the rise, right? I want to be looking at the market leaders, the stocks that are leading in the sectors, whatever different, sectors or subsectors. Those are the places that I want to be looking at, not the places that are now the cheapest, right? It's like the difference. If I'm expecting a stock to be a Ferrari, but I'm looking at only stocks that are Hondas, that's going to completely change the different performance of the stock, right? If I want a stock that's going to be a high performance stock and have a potential to grow super quick and be very good performing, it's probably going to come at a premium. And that's going to be stocks that are hitting their 52-week highs, not the stocks that are hitting their 52-week lows. It's just a different way to look at it. And that's what I've kind of been focusing my methodology, the way that I think, is based around, stocks that are running on their 52 weeks high, or at least close to their 52-week high. Find the leaders, focus on the leaders. Okay. So the next thing I want to talk about here is earnings supported by revenue. And there's a reason why this is critical. And I'm actually going to jump down here to expanding margins. Really, you want to have all three. You want to have a stock it's growing its EPS, has growing revenue, and has margins that are expanding. But the reason why it's really critical that you have EPS growth along with revenue growth is because you can, for example, a stock can have let's top back down here to Nike. You can have a stock that, let's say, is increasing their margins, right? And so this quarter, maybe it was because their cost of goods sold was cheaper, that maybe they improved their manufacturing, they were able to cut costs somewhere, whatever it may be. Or maybe Tesla. Let's look at Tesla. Maybe Tesla is, they're increasing their prices. And so, they're increasing their prices, but the cost of good is becoming cheaper to make, right? Because of maybe materials are cheaper, whatever it may be. They're able to increase their margins. The problem with that is if you don't have revenue that's increasing at the same time, you're going to get to the point, let's say you grew your margins from 25% to 35% this quarter. Well, that's great. And we love to see that. It makes a massive impact on how well the EPS is growing. But the problem with that is you're only going to be able to grow your margins so much, right? Maybe the next quarter or maybe the next year, you're only be able to grow your margins by 1%. And so if you don't have revenue that is also supporting the earnings at the same time, then and so the earnings is actually coming from margin expansion, at some point you're not going to be able to, that stock is going to have problems with their EPS going forward. They're not going to be able to grow their EPS because their revenue isn't growing at the same time. So when I'm looking for stocks, I want to see that their EPS growth is supported by revenue growth. Now, if I can also have expanding margins at the same time, that is fantastic. That is, all three of them combined is what I'm looking for. But really, I want to find stocks that are growing at least 20% year over year EPS with growing revenue. And that's kind of subjective, like, how much growth of revenue, the more the better, right? But I just want to see it trending upwards. And same thing with margins. If they can improve their margins, great. All of these things are signs of acceleration. They're signs that the company is doing well, that they're doing things right. that their EPS is growing, that their revenue is growing, that their margins are expanding. Those are all great things. And those are the things, if you go back historically, you go back and look at all the stocks, ones that have had tremendous moves that make these massive parabolic moves, it's usually because of these things here. Though that is the correlation from for all the stocks that have super performance, that there's super stocks that go like crazy. Uh, they're all based around this stuff. So for me, when I'm looking at stocks, I want to find stocks that have those similarities, that they're on this right track, that they're going to be a market leader. Okay. One thing to point out to talk about, I'd like to just point out here is that fewer than 25% of stocks of fewer than 25% of market leaders in one cycle generally lead the next cycle. Now that doesn't mean that they won't. Whatever stock that was a really good stock in the previous bull market is not going to be the new one in this next cycle, but it's just less likely. Fewer than 25% of them are actually the market leaders. So what does that tell me? It tells me I need to get familiar with names I may not be familiar with. That maybe I don't need to focus as much on the stocks that were, okay, well, let's say Tesla. I like Tesla. I think that Tesla does have a great future, but I wouldn't be buying it right now because I think that it needs some more time to consolidate here, right? But there's no doubt in the last bull market, Tesla was one of the best stocks to buy. You can't argue that. It was amazing the growth that this company had and how much their price, how I mean, let's just take this. Let's go here from here to here. I mean, that's an insane move, 128% over 128 days. That's just crazy. But I don't know, just because they had that growth before doesn't mean that they're going to have that growth in this next bull market. Whether you debate if we're in a bull market or still in a bear market, doesn't matter. You may just have to look at other different stocks. So I'm not afraid this information here does not mean that I have to follow the same stocks that, or think that the same stocks that did well the previous cycle are going to do the same this cycle. I'm not afraid of looking at stocks or names that I've never even heard of, because maybe those might be the ones that are showing me the signs of acceleration that big money are going to move into. Okay. So the next thing I want to talk about, and so that's, I guess, kind of covers trend. So trend is, basically this. I want to see that stocks are in an uptrend. So for me right now, you could say that Tesla is starting to look better, maybe a little bit, but by and large, they're still in a downtrend. And I can just quickly see that the MAs help me see that, but I don't even need the MAs to see that. I can just kind of see that it's still not time for that for Tesla. However, if I look at, let's say, a stock like, let's look at Nvidia, I can see that, well, they're clearly, if I zoom out, I can clearly see Nvidia is doing something right. Now, is it going to continue? I mean, your guess is as good as mine. I feel like, yes, they have a good shot at continuing, but the trend is clearly up. And if I compare that to where Tesla's at right now, I can't really say that. Maybe year over year, things are looking a little bit better, but I mean, they still haven't even broke out of their 52-week highs, as opposed to if I go over to Nvidia, I mean, where's the 52-week high? It's up here, right? 3 days ago. So this, to me, even though it's come down, we just had FOMC today, so things got a little wild. But this, to me, is much better than Tesla is right now. Why? Because the trend is up, right? So when I come back to my trend template, this just helps me kind of filter out of all the garbage, and this is what I'm looking for. These are the stocks. I want to buy strong leaders. And this is what helps me find those leaders. Okay. Next thing, fundamentals. We went over that. That's just the things that I'm looking for in the fundamentals. And once we get over to the actual screener, this is going to make a lot more sense. We'll dive deep into this. Okay. So volatility contraction. The next thing that I'm looking for, and this is just my strategy. This is my strategy for breakouts, is based on volatility contraction. So what is volatility contraction? Let's go back to Nike just because it's easy for me to show. Volatility contraction is when if you look here, zoom out a little bit, see how price just knifes down and it comes back and knifes down and it comes up, knifes down, right? These are pretty big moves, right? So if you compare this move and this move and this move, Those are pretty large. In fact, let's do that. Let's go from here to here. Let's go from here to here, right? Kind of going from highs to lows a little bit. All right. So I mean, these are, see how it's getting bigger each time these moves. I mean, you could almost argue going up here, right? But let's just say from here, right? 25%, 28%, 31. Okay. Now, what do we see over here? You see how volatility is contracting? It's getting narrow and narrower each time that the price comes up to a level. It's starting to pull back more, or it's starting to pull back less and less and less, right? I'm getting too much stuff here. I can't even see what I'm looking at. Can you see the difference? Or another way to show it is basically what is we all know as a cup and handle. So the price comes down, right? Forms a cup, and then you get a handle, right? This is volatility contraction. You had expanding volatility. Price just goes up and down, up and down, up and down. And you come to a point where each time it pulls back less and less and less. Sorry about that. It's pulling back less and less and less. And more importantly, it's coming to a point. I'm going to delete this so you can kind of see it a little bit better. It's coming up to what is called a pivot point. It's a point where the sellers stepped in the most, but they could only push the price down so far, right? And you can see how every time price it stops here, right? You could almost argue that this is also a pivot point, right? But I'm using this one here, and price comes down. This is the low. It comes up, and again the pullback is less. The pullback is less. The pullback is less, and it comes right up to that pivot point. This is your breakout level. This is buying the breakout. And I'm actually in Nike right now. I'm swinging Nike calls, although I bought it up here. So it's actually come back. My calls are still sitting at even today. And things have been pulling back a lot more than what I was hoping for. I'm not getting that explosive move that I was looking for, unfortunately. So maybe this might be a loss. But this is a high probability setup. You can see this volatility contraction because every time, what does volatility contraction tell us? Well, it tells us that every time price comes up, sellers are pushing back, that they're not able to move the price down more and more, as opposed to here, there's just nobody buying the stock. I mean, yeah, you have a couple days that it's coming up, but every time sellers are just stepping in. And here you start to see this turnaround. And you're seeing this reduction in volatility. It went from being a very volatile time from, big swings from highs to lows to less volatility from highs to lows, right? So this tells me that there's less sellers pushing the price down and there's buyers that are pushing the price up. You understand? Does that make sense? Hopefully that makes sense to you. The other thing, so what I'm looking for is basically the reduction. I kind of already pointed that out, but a halving, let's say each time it gets half, right? So it goes from 25% down to, let's say, 15%, down to 8%, down to 4%, down to 2%, just as an example, and that point it may shoot up. But those are the types of things that I'm looking at. Or maybe it's less. Maybe it's going from 15% down to 5%, down to 2%, right? Whatever it is, doesn't matter. What I'm looking for is that volatility is getting less and less. And that's telling me a lot about the supply and the demand of what's actually happening, right? So the next thing I also look for, it may not always be like a cup and handle. It may be a volatility contraction can also come in the form of what's called a flat base. It's basically a sideways move within, I'm looking for anywhere from about 10 to 15%. Now I'm going to go over to, I'm going to go over here to my swings. And I'm going to try to find, I think this stock, yeah, this was a great example. So here we can see, okay, volatility, things are still pretty volatile. And you could argue that this is some pretty good volatility here. But what I'm seeing here is that price is starting to form what's a flat base, or you can say just a consolidation if you're familiar with that term, right? Where price is just consolidating back and forth between a pivot high and a pivot low, right? And it's not going any further. It's not going any higher. Well, when price breaks above that high, right, expect a good volatile move. This is volatility contraction, right? Because we went from here to here, and now look at what price is doing. It's ping pong back and forth. Even this is still a pretty violent move. So if I compare what this move was here to here, all right, so we have 18%. And if I compare what this move was to here, that's another 18%, right? But if I compare what this move is here, that's 5%. I compare it here, that's 5%. And obviously 5% again, right? See how volatility is getting less and less? That is what I'm looking for when I'm looking to swing a stock and buy a breakout, is I'm looking for this reduction in volatility. I'm looking for a reduction in how far price is moving up and down. And I'm typically looking at the daily. I should have pointed that out earlier, but all of this information, when I'm looking at these MAs, I'm always looking or basing it off of the daily. I look at the daily and the weekly a lot. I want to see what's going on in the weekly, how the weekly looks. But really, all of the MAs and everything is going to be based all off the daily, and so I spend a lot of time on the daily. Occasionally, I'll look on the 1 hour if I just kind of want to see fine tune of what's going on. But when I'm looking for swings, it's basically off the daily chart. Okay. Next thing, what I like to see on these big breakout moves is this huge increase in volume, right? This is beautiful. When you see this big boost in volume, that means that buyers were stepping in and that this move up is validated. As opposed to if you see this big move up and volume's low, that could be a good sign as a fake out. But when you see big volume, it's a pretty good sign. Now, what's interesting is they actually had earnings today, and we'll dive deeper into that. I'm curious to actually see. I haven't looked at this yet, so I'm curious to see year over year how they're actually doing. But it's interesting that they came right down to this pivot point and it comes back up. So this could have been another good entry spot. There's even strategies out there buying the pullbacks, right? You had a perfect opportunity to buy the pullback. Be curious to see how this stock actually performs over the next month or two. It's already on my watch list. I actually alerted this on the Caveman Discord when the price was right here. I actually alerted this on the night of the 26th. And, if you were to say bought in the next day, you could have easily taken this up and had a 10% move. Now, that's not like the 50%, 100%, 200% moves that you can get with options. But I'll tell you what, if you want to have a pretty low risk trade that you're not like, starting to have heart palpitations or having increased anxiety for, this is a pretty easy move up for a nice clean 10% over the, basically, 2 days. That's not too bad of a move. I would take that. Unfortunately, I missed this because I wasn't paying attention. I forgot to actually set in my alert until after it happened, so I missed it. But this is a nice clean setup. But coming back to what I was pointing out is volatility contraction. There's multiple ways to look at volatility contraction, and this is one of them. And the other one is like looking at Nike, where you have a cup and handle type of volatility contraction. What matters is what the supply and demand is telling you, right? This tells me that there's less supply stepping in that's pushing price down. That means buyers are stepping in and pushing this price up. That's what volatility contraction is, okay? Very easy to see on the chart. Of course, I still do TA, doing trend lines and looking at those things. I'm not saying I ignore those things, but when I look at stocks, this is what I'm basing a lot of the information off of, okay? And support and resistance, of course, are big levels. 52-week highs, 52-week lows, all of those things are going to be, big. But these pivot points, looking at where the price came up to and where it's struggling to get above, that's where buyers are stepping in. So we're just trying to clear out all the remaining buyers before the price can go up. That's the basic idea. Okay, so what's next on our list here? Volume dry up. I didn't cover this. Seeing volume when the price pops above is one thing I want to see. But another way one thing I'm not happy about with this trade, like I said, I am in this trade right now. I'm not happy with what is happening with volume. I actually bought when it was just breaking above this high, right? And I was really hoping to see that volume was going to increase, and it didn't, right? So this trade, I might cut this, and right now I'm at break even, but I might end up having to cut this trade just because it's not moving. Volume's not stepping in like I would like it to. Now it is pushing back off of every low that it tries to get, it comes back up. But, we'll have to see what happens. But when it comes to volume dry up, one thing I'll want to come back here to see if I can find a spot. Yeah, let's look at this right here. Sometimes it happens. It's not always earnings based, but a lot of times these moves do happen, of course, on earnings. But look at this, right? So you have volatility, where price is moving. And although this is still a volatile move, but you have a reduction in some volatility. But look what happens the day before it makes this massive move, right? This isn't a perfect example, right? I don't know if I would have been a buyer here because this isn't exactly what I'm looking for. But look at volume basically the day before, or the penultimate day before the price made this huge move based off of earnings, of course. Look at volume. It completely dried up. So those are things to also pay attention to. If you start to see price is coming up and it's just sitting right on this pivot level, and you start to see volume just die out, what that tells me is that there's not a whole lot of sellers that are pushing this price down as it approaches that pivot level. Because you got to think, sellers are stepping in here and going, oh, price is to that level, I'm going to push it down, I'm going to push it down, I'm going to push it down. If volume's drying up, that means that there's not very many sellers that are stepping in at that price, and so it's probably clear to push up. And that's what big money is going to be focusing on, in my opinion. I could be wrong. You can interpret it differently, but that's just the way I look at it. That's the strategy that I like to follow. Okay, so let's look at, one last thing to point out here is overhead supply. So if we go and look at the 52-week highs, where is the overhead supply? I mean, you got overhead supply here on your 52-week high, but besides that, you got pretty clear selling, right? There's just not a whole lot standing in your way up here. Now, of course, if we zoom back, you'd be like, well, yeah, there's some here. There's, of course, up here. There's going to be resistance. But I'm going to say either a lot of these people have probably already sold their positions. There's a good chance. I mean, do you think that the people that bought here are either they got out here or they've already gotten out here? I would say that they probably have already gotten out, but people are going to do their TA and they're going to look at it and be like, oh, yep, I'm going to enter short here because that's where there was a previous resistance, and there's some truth to that, right? But when we're looking at on the yearly chart, there's just not a whole lot standing in my way, and I think that does mean something. That does it does mean something. That is important when you're looking at the chart, is that there's just not much overhead supply, and I'm not afraid to buy up here because that just means that somebody's moving this stock. I don't know who, but I'm going to assume that big money is, and there's probably a reason why they're moving this stock. Or let's look at Nvidia real quick. So there's probably a reason why big money is moving this stock. If we look at the yearly highs, right? It's at its yearly high. And there's a reason why. Just because it's at its yearly high doesn't mean that it has to come down. It means that there's a reason why this stock is being moved up. And it probably, as what you're going to see in just a little bit, it probably has to do with some of this going on here. Not always. There can be a lot of other reasons, but a lot of the times it's because of this, okay? Last thing to point out here is that I typically don't look at 50% more or more corrective moves from highs. Ideally, I'd like anywhere from even less than 10%, but 10 to 35% is what I'm looking for. So just as a quick way to kind of show that, I'm just going to hop back here to Nike because we've been on it. A good way to illustrate that is just looking at how far the pullback has been. So in this case, it's only pulled back 11, almost 12%, right? I don't want to buy it when it's come way down here. If I do, it's totally invalidating my setups. I don't even really pay attention to this. That's just, I guess, kind of just a general rule. But I don't want to buy if it's made too much of a steep pullback. You might have that when a stock is newer. You might see pullbacks like that after they just IPO'd or whatever. Maybe a year after IPO, you may see pullbacks like that. But generally, when I'm looking at that, I'm looking at for this volatility contraction. And if you're looking at volatility contraction the right way, this isn't really going to matter. I just kind of threw this in as kind of just a general rule. So, okay. I think, let's see if there's anything else that I missed. I don't think so. So let's go ahead and dive into the actual screener. So the screener here it's on investors.com, and it's called the MarketSmith. Now I will let you know that this is not necessarily a cheap screener, but it provides really good functionality, and I really like how it displays the information. So there's a lot to unpack here. So I'm going to try to go through as best as I can, just kind of pointing some stuff out to you. The stuff I look at, the stuff that I like. But the first thing here, this black line is going to be the S&P 500. So this can quickly just show you, the S&P 500, where it's at and what the stock is doing in comparison. You also have this blue line. Now this is going to be that RS line. That's going to be the thing that I was talking about earlier, right here, the relative strength, right? This is going to show you what the relative strength is. It compares this stock versus all of the other stocks in the stock market to give you a rating of the RS rating, the relative strength rating. There's a few other things here that I'm going to just quickly go over. You have the EPS ratings that just gives a rating of how good their EPS is. Of course, we already explained what the RS is. The AD rating, AD is basically what MarketSmith attributes to accumulation or distribution rating. So is it in accumulation or is it in distribution? If you're familiar with Wyckoff theory, then this will make sense to you, but this is basically just, they give it a rating. It doesn't mean it's right, but that's how they rate it. And this SMR is going to be the sales, the margins, the revenue, the return on equity. It's basically just where their sales, margins, and return on equity or EPS, and it gives a rating to where it's sitting. And then you also have your industry group rank, which we'll get into here in just a little bit. This comp rating is combining all of these together to give you the very best stocks that combines all of these, right? Hopefully that makes sense. So there's different ways to filter this, or to sort it, I should say. But I'm just going to come back up here because this is where I spend a lot of time looking. One thing that does do that's really nice is it has like an algorithm that shows you like a cup and handle, and it shows you like breakout days. What I like is it shows you, it kind of just draws attention to it. I mean, obviously I can see it myself, and I'm going to draw it up on my chart. Like I usually look at a stock here and I bring it over to, if it's something I'm interested in, I'm going to bring it over to my trading view and actually, do a little bit more charting, look at closer where the pivot points are and such. But this kind of just gives me a good snapshot, kind of brings attention to it. And what I like is it shows you like how many days their estimation for what their algorithm says is a cup and handle, how many days that the length of that cup and handle. So in this case, it was 58 days. And the depth, so how much was that pullback? It was a 16% pullback, and it says that the handle is a 5% pullback, right? So what does that tell me? Just by looking at this is volatility contraction. And these numbers here, the depth of the cup and the handle shows you a reduction in volatility. This little balloon right here just shows you the largest volume since its base, right? So this is what it's calling a base, whether it be a flat base or a handle, shows that here's where the big volume is. Now, one of the things that I love about this screener is it so clearly shows your fundamentals. It lays it out in a beautiful way. So what I can see is this stock was in a downtrend, right? And if we look at this number right here, so this is where the earnings came out, and it shows me not the earnings beat. Like here on TradingView, it shows you what the earnings beat were and the surprise, right? That's not what this is. What this is showing me is the year over year reported earnings. And so I can see just by quickly looking at this that their earnings in September 2020 were $1.38. And in this earnings report, it was in September 2021, it was $1.99. So that's a year over year of 44%. Then it went backwards, right? Even though the actual earnings is still growing from $1.99 to 221, so that's actually an increase, and you can see that. Well, I guess you can't see that here yet, but that's increasing, but the year over year numbers are actually decreasing, right? And at that same time, now look what you see what happens if we're looking. Just look at the December 2021, 221 was what their earnings were. Now it's starting to go backwards, right? We're not only having less EPS. Well, I guess the EPS year over year is still decent here, but look at this. The earnings is starting to go down, right? Here, I guess it went up, but now look at where we're at. See, we're trending down, right? And even though the stock is building up, there's probably another reason why this stock is starting to move up. And you'll just have to dissect that. Maybe they have new products coming out, whatever it may be. But for me, if what I like about this screener is that it quickly shows me the direction of where their earnings have been. And there's probably a pretty good correlation, like, I mean, let's just pull up Tesla real quick. Do you wonder why? I mean, there's a lot of reasons why Tesla is coming down. I mean, we were, of course, in a bear market. Elon was selling a bunch of, stock, so that, of course, is going to put pressure. But look at their EPS growth year over year, right? Is there a reason why Tesla has been moving down lately? Well, let's look at this. In 2021 compared to 2020, they were growing at 148 year over year EPS. Boom, they were coming here and they had a 215% increase. 245% increase. Now we got problems. See how we're trending the wrong way? We're moving down. Instead of growing, it's starting to have problems here. And you can just kind of see where things are heading. And then now we get to current, basically with the earnings that were just reported a couple weeks ago. And they're negative. The year over year change is negative 21. This is problems, right? Now, of course, the economy hasn't been good, so you're going to see consistency of all stocks. But I'm going to show you in contrast. Let's just go to one of the stocks we looked at earlier, which is OWS. I want to look at just where their stock is looking at, right? And I'm just going to come back here real quick. OWS. Is there a reason why this stock has been moving up? Let's come back here and look. Why is this not loading? There we go. Okay. Look at their EPS growth, right? So if I don't know why this says NA sometimes. But if we look at this, we can quickly see that they were negative 0.21, now negative 0.11. The next one, they went from negative 0.24 to negative 1. Here, I guess technically down, but still improving in the trend. And then all of a sudden, now we have growth, year over year growth, 999% change. That's massive, right? And then here we had, so this is what was reported today, I guess. Yeah, this is what was reported today. We still have a tremendous growth trend. We're still, I mean, yes, it is. We're comparing 999 or plus 999, right, compared to this. So still, this stock is doing quite well, right? This helps me so much to just quickly see what's happening with earnings. And to me, it just is a beautiful way to lay out that information. Next thing I want to point to is down here. And this is just basically looking at the past year's returns. So here we have earnings, right? And that's kind of the same information. So you got the past year. So here's 1 year ago, or I guess 4 quarters ago. And so here we have the 125%, and this would be comparing the year over year, right? And here we have our sales. So you can just see what sales we're at year over year. And so this is what the current sales are versus the previous sales. There's a clear trend. They had a 127 million. Now they're at 162 million, 168 million, 182 million. There's a clear trend of this company is growing. Their revenue is growing. Is there a reason why this stock is moving up? Is there a reason why my assumption that big money is starting to move their money into this stock? I have no idea what this company is. I've never even heard of this company before, but I've researched them now, and it's interesting, right? Look at what's going on with their margins. I guess this time their margins was not quite as good, but we have a clear growth in our margins. I like to look at after-tax margins, just because it's a little bit truer margins for me. But you can also set this up by going to your little tool, and you can look at if you just want to look at gross margins, you can see that there's a clear trend in growing their margins as well. To me, this shows why the stock is as an uptrend, as opposed to only just looking at the technicals. If I just look at, the technicals of what's going on, I would never have any idea of the strength behind this move, right? And so by looking at this type of information, to me, it gives me a much different perspective and gives me confidence that I'm not just buying. Like if I'm looking at this stock on a technical level, I may be scared of buying in at the highs right here. But when I look at this, I can see there's a reason why this stock is moving up. And it gives me a whole lot more confidence to buy up here because it's probably going to keep on moving. Now, of course, today it did move down a little bit and rebounded. So we'll see what ends up happening with this stock. But you can just, to me, it lays it out in a beautiful way, right? We can also see that what analysts are expecting for the rest of this year, this is a little bit of a red flag for me. So a negative 46% for the rest of the year. We'll see what ends up happening with that. But in 2024, they're expected to grow at 100%. That's pretty decent. So pretty cool information. So that just kind of shows you the layout. They're 1% from pivot in 3 days. So that just means that this was their pivot and where they're at, like what percentage the stock is at since their pivot. All right. So next thing I'm going to draw your attention to is we'll just come down here. I'm going to come down here and I'm first going to show you this market groups. And what I like about this is this will just lay out what basically sub sectors are the strongest. I like to pay attention to this, look at this every couple of days, maybe once a week, and just get an idea in my head of what sectors are the strongest. So I'm going to filter this by, or sort this, I should say, by industry group ranking, right? So I want to look at which ones are the absolute strongest. And so right now, the strongest sector is going to be computer software, education, media. And I mean, look at, NVIDIA, look at Microsoft, look at, what's been going on with tech. It makes sense why this is the number one, right? Also, you have, there's been concerns with the US dollar losing its status. So that has people buying into gold. So gold stocks are doing very good right now. What's surprising to me is we all think that the housing markets, in housing and commercial real estate markets just collapsing in terrible condition. But if you look at their stocks are actually performing quite good, and they're number 3, right? One of the reasons why I'm actually in Nike, come back here, was because if I look at, I'm just going to pull this up so we were looking at the same thing. Even though this earnings was not great and these numbers were not great, right? If I have come down here and I look at apparel, shoes, and retail manufacturing, they're, number 8. I think they were number 6 on the list when I bought this. But apparel, shoes, and retail manufacturing has been quite good lately. And so that gave me more confidence in buying the stock because I know that this subsector is actually doing quite well. Built on, when I couple that with a good technical setup, it gives me more confidence in that, right? Now, I will say I'm not overly impressed by what's going on with their EPS and what they're, yes, we do have it's trending better, right? But and certainly comparing here, negative 20% on their EPS, now 2, we went down to 9, and that's probably, I guess the stock did okay. It's been okay after that. It's not my favorite, but with all these things combined, you can have ideas of what potentially can be good stocks that you want to buy into. Where's big money moving into next, right? So I just like how this lays it out. You can also see, like what type of patterns are forming with the actual subsectors. So this just displays it really nicely. Next thing I'm going to point you to is on basically these reports and then coming down to stocks and then technicals. There's a bunch of different ways to filter stocks. Now, I'm going to come back here and show you this again. Following this trend template, this is based off of Mark Minervini, right? And how I actually discovered this scanner was based off of Mark Minervini because he actually has an own trend template built into this, right? So basically what this does is this trend template is basing off of his template, this information, not this right here, right? Just this information is plugged into, and so that way I only am seeing the stocks that follow these parameters. That way I'm only seeing stocks with the prices above the 150 MA and the 200 MA, that I can see stocks that are within 25% of their 52-week high, that their relative strength is not less than 70, right? And so this basically gives me a nice filter to be able to look at stocks, and then I can just quickly go through and see if, like, okay, is there any stocks? Not everything in here is going to meet the exact qualifications. Like, I'm not really excited about this stock, right? It's not something that really is that attractive to me. But then I come to, let's say, I guess they had, probably bad earnings here, so I'm not too interested in this. But occasionally you'll come across a stock that all of a sudden meets your whatever your eyes are telling you, like, this looks good. You'll find something like, this is, a nice uptrend. I don't know if I'd buy this, but hey, it's interesting. It's a cool way to be able to, go through and look at different stocks, and it really, I don't know. It's a good way to organize different stocks, right? This is actually one of the ones that I mentioned over on the Caveman Discord that looked interesting to me. So you have a nice, cup. I actually have a cup within a cup within a cup, right? So every time it's consolidating, and now we're forming a handle, right? And so it's a cool way to show you that information. But if I'm looking at this, I have questions, right? Because if I am looking at their EPS growth, although I'd say it is getting better, it's still not great yet, and I'm not seeing, revenue is increasing, margins are getting a little bit better, but I'm still not seeing fully what I'm looking for here. Although the estimates for 2023 is better, and 2024 is pretty good as well, but I can assess that further. I can look at the the chart and see, okay, is this something that I'm interested in, right? To quickly explain this 1 month Mark Minervini trend 1 month, what that means is that the 1 month, the 200 MA has to be trending up for at least 1 month. Whereas the 5 month, the 200 MA has to be trending up for at least 5 months, and that's going to give you completely different stocks to look at, because the trend has to be going up for a lot longer. Now, as we come out of the bear market or things start to improve, you're going to start seeing more and more stocks populated in the 5 month, because that 200 MA is going to be sloping up for longer, right? So that's pretty cool. Another stuff that I like to look at. Well, actually, before I move on, I'm just going to come back here to the 1 month trend. And let's say this is the number one stock for whatever reason. But let's say I want to filter by or sort by just the stocks that have the best EPS rating, the best RS rating, that they're apparently not, they're in the better of accumulation and not in distribution. They have a good SMR, whatever, and have a good industry rank. I can just filter by the comp rating and show what is the best of all of these together. And then I can start going through different stocks and filter it that way if I want to. Just a lot of different ways to be able to use this. Or maybe I want to only look at the stocks that are the highest in their industry group, right? So all of these, these stocks are really high in their industry group. So this is showing you stocks that are in the highest of the industry. So there's a ton of gold stocks right now that are, really doing good. Another thing that you can do is if you start seeing like a lot of stocks, like right now, I'm only seeing 2 stocks that are in shoes and apparel, right? Or apparel and shoes and retail manufacturing. But if I start to see 5 stocks, 6 stocks, 7 stocks start to populate into this, that's another good sign that there's momentum in that subsector, that things are starting to turn around as well. So there's just a lot of different ways to be able to filter this. If I want to look at, the percentage off high, I can look at that. So I can see, like, this stock obviously is probably, yeah, it's above its, this previous high, 52-week high. If I want to look at stocks that are just below it, there's just so many different ways to be able to use this. And to me, it's really handy. But the other ones that I like to pay attention to over here is, let's see, this RS line is new high is pretty nice. So what it shows you is it will just show you stocks that are forming a new RS high, the relative strength highs that they're, like here. So you just see stocks that are pushing up, different ways to filter it, different ways you're going to find different things depending on, what criteria that you put into this, right? Hershey's, what a beast. The stock is just insane. But I'm sure the stock is always up here. It's always probably forming new relative strength highs by the looks of it. So you can just kind of see, it's just a really cool way to filter and find different stocks. This has helped me out immensely. And hopefully it can help you guys too. I'm going to kind of wrap up the video here because I think I've shown you guys enough. It's been a long enough video as it is. Kind of recap. These are the things that I'm using in my screens to be able to, filter down and find just the right type of stocks that I'm looking for. Once I start looking at the stocks and I have this pulled up, when I have this pulled up here, I'm going to start looking for these types of information and see if the move, that the trend move is supported, if this is supporting that move, right? Is growth starting to, is EPS growing? Is revenue growing? Are margins growing? Is there signs of acceleration? Is there a good technical setup? Am I starting to see this, right? So that's what I'm looking for when I pull up my screener, and I can just quickly go through it. And you can honestly go through it pretty fast once you know what to look for. So, yeah, that's pretty much it. I don't know if you guys have any questions. If anybody does have questions, feel free to, get in contact with me. I will say again that this is not exactly a cheap screener. I think this is like a trial version. You get this for like $30 for a month. After that, it's $150 per month, which is just, in my opinion, way too expensive. However, if it makes you $150 or more per month, then maybe it justifies. If this saves you time from having to look through, hundreds of different stocks manually by just, going in and typing them in. Or, for instance, the one thing that I like about this screener is it gets me to look at stocks that I would have never known about before, right? Because maybe on your Discord or something like that, people stick to the same stocks, the ones that we always look at, and I never look at any other stocks. Well, a screener like this helps me do that. And maybe you can, you don't even need a screener like this. I just like how this looks and with the information it tells me. But I'm sure there's tons of other screeners, probably free ones out there, that you can kind of get something similar to this, or at least filter it down. Now, the last thing I just want to say is, be careful about by filtering too much on your screens, right? Because let's say for instance, I like to use this as kind of my template for what I'm screening for, and that's really based off of Mark Minervini's template. But let's say I start adding an extra filter in there that I'm only looking at stocks that have a growth rate of over 20% year over year. I can do that, but I may miss. Let's say a stock hits on. Let's say you have 10 filters, right? You're filtering your screens through 10 different filters. You apply 10 different things to your screens, and it hits on 9 of them, but not the 10th one. And that 10th one is what's keeping you from finding a really good stock, right? So that's why for my screens, I just want to see stocks that are in a good uptrend, because that's my strategy. If I want to short stocks, then maybe I'll flip this around and do the exact opposite, right? And the other thing to point out is this is not always going to work for every market. If you would have done this, let's say, if you would have been looking for this stuff, say 6 months ago when we were at I'd say the height of the bear market, this is going to be pretty dry, but that's telling you something. It's telling you, hey, maybe I shouldn't be looking for stocks in the uptrend and I need to start looking at shorting, right? So if you're looking at your screens and you're starting to see less and less come through, and there's this RS line is looking more and more bleak, it's telling you something about the market conditions, right? But the one thing just to come back to is, if I would, let's say, if I'd have this, but then I'd put, 20% year over year growth on EPS, it may limit me. So I try to not put too much into my screens, and I kind of filter that out. Or maybe I might have multiple different screens and run different types of screens to be able to find different things and compare. And maybe if I see a stock on one screen, one type of screening, and I see it on another type of screen, okay, then that tells me, okay, this may be something that I'm looking into. This is a good stock to look at. So, I don't know if there's anything else to really show off in here. I think that was pretty much it. One thing I'll just point out on this actual software is it's not really good for doing drawings and stuff like that. It's pretty clunky. Like I can't even delete these. The only way I can delete them is by like going to the weekly and then coming back here to the daily. So if you're doing charting, I would not recommend this. That's why I always just use this for a screener, and then I come back and actually do my charting, and I look on the trading view because I just love the way that trading view works. So I'll continue to use trading view for that. So yep, gonna wrap it up there. Thank you for checking this out. Sorry this is so long. Hopefully you found some useful information. And like I said, if you guys have any questions, be sure to just give me a holler. Appreciate you guys. Thank you.